Salute Trade Game team. What's going on? Good morning, good afternoon, good evening, depending on what time of the day it is when you watch this. It's your boy Jimmy, and you are watching Trade Game Official. I'm your host. So, just a quick disclaimer. This video is going to be one of many. I might have on the same shirt and hat because I'm recording bulk videos to try and get some of these topics done. I also want to put some of these in audio format and put them on SoundCloud and other places where you might watch a podcast. So depending on how the audio come out and how clear it is, I may have these up available on Spotify. Of course, the link will be in the description for the audio format for those who are at work or just out and about and you just want to hear some Forex talk, some financial talk, some entrepreneurship, some motivation. You already know that's really what it is, to try to get the mind right for trading. So let's talk about today's topic. Today's topic is going to be an interesting one. Today's topic is going to be talking about brokers. Should you use a regulated or offshore broker? Because this comes up at a certain point in your trading journey. This is going to be something that you're going to be faced with. Should you use it? Should you not? We're going to talk about the dangers, the pros and cons, and just, I'm going to keep it real. I'm going to just tell you the spiciness about it. Like, what's the deal and why people use offshore brokers and why people use regulated brokers. Because, you know, I know traders that do both, okay? My mentor in particular, he doesn't really trade outside of regulated brokers. And I'm going to tell you why. I'm going to explain all this to y'all. Right now, one of my accounts that I trade on, I have so many accounts, I'd be lying if I tell you how many accounts I have. Every broker I have at least 2 accounts with. Maybe if I got 1 account with a broker I'm trying, but if I'm trading daily, that broker I probably have at least 2 different accounts. One for me, and then I have probably another account with somebody that I'm doing a project with. I have the main account that you see when I post like 20 trades and better. That's a group account that I'm trading with somebody, okay? Now, that is an unregulated broker. Now, let's get into the talk. Why am I using an unregulated broker? It should be obvious, but a lot of people use regulated brokers because they want to protect their capital. A lot of people use unregulated brokers because they want to use margin. A lot of people know what that is, but for those of y'all that don't, margin is what the broker allows you to use as far as taking a trade. Like, let's say you want to trade Amazon and your lot size is a 0.01. You would normally need $1,000 to take that trade because you're pretty much holding a stock and trading it. The broker, depending on their margin, they'll allow you to trade that even if it's just $1 you're risking, but you're really risking more. The broker's just allowing it. How is that happening? That's happening because the leverage you're using is usually anywhere between 100 and better on an offshore broker. Regulated brokers is usually 50. The reason for that is because they don't like taking risk. That's the whole purpose of them guarding your money. Now, the main reason people switch from offshore to regulated brokers, and I'm gonna tell you why, is because once you have a certain amount of capital, it becomes a question of should you use a regulated broker, simply because you know how to trade by then if you have capital. 2, an unregulated broker, offshore broker, if you read the fine print, they can do what FTX did. They can take your money and just close the business, and say you got 100,000, 6 figures in your trading account. You accumulated, you compiled that point, right? Because what a lot of people do is they trade, they build their account up, they become profitable, and then what they start doing is they start taking a certain amount out every week, every other week, or once a month. Or every day. Some people do it every day. If I have 6 figures and I make 10,000 Monday, I'm gonna take 10,000 out. If I make 14,000 Tuesday, I'm gonna take 14,000 out Tuesday. I'll wait till the end of the week and take out 50,000 off that 100K that I have and leave the 100K there to trade off of. A lot of people do that on offshore brokers, but what some people don't care about, they know, a lot of us know this. Of course, you probably know this too, but we really don't have this conversation. And what people don't care about is the whole fact that you could wake up tomorrow and your broker is just gone. It happens. It happens. You know, especially in today's climates with the recessions. America is running like there's no recession, but around the world, people are saying they're in a recession. Okay, so America is like one of the only countries claiming that. Of course, the power of the dollar and such and such. I won't get too political. That's a whole nother conversation. Bottom line is, you could wake up tomorrow and your broker could be gone. And guess what that means? Because you agreed to put your money in that account, your money's gone. Now, with a regulated broker, you have FDCA regulations where, say you have 300,000 That broker can also do the same thing. Believe it or not, a lot of people think, oh no, your money's protected. Some of your money is protected. You got to read and see what they're allowing. Like banks have a policy where most banks, if you have 200,000 in the bank, they'll cover up to 200,000. Anything after that, you're on your own. So that's why you have people who have multiple bank accounts, just like you should have multiple broker accounts. I'm not leaving all my money in one broker just because any broker could run off with your bread. Now, a lot of regulated brokers will insure up to a certain amount of money. So up until that point, you're safe, you know, legally. But even then, a broker can still close. So then we get into the pros and cons here. Even then, a broker can still close and take your money. You know what I mean? Even a regulated broker can go, hey, we had a disaster. We don't know where the money went. And guess what? You're entitled to 200,000 of that money because that's what the FDIC is going to approve up until, right? Now, that's fine and cool. That's fine and cool. And I think I'm saying FD. I think it's FDIC. I'm pretty sure that's what it is because, you know, I had a lot of issues with banks and property and trying to take money out, and I've been through stuff, so I'm pretty sure that's what it is. But if I'm not, you can correct me in the comments. But yeah, so you can still have this issue, but it's just more likely that you'll get some kind of compensation versus an offshore broker where, guess what, you wake up and your offshore broker dipped on you. Well, guess what? Guess what you're gonna find out about that situation? Nothing, because there's no, you know, you agreed to that. You agreed to take the risk of putting money in an account where they can just walk off with your bread and just walk away. If everybody put $1 million in Henko Trade and Henko Trade's overall capital inside of the actual broker, because the broker has all the money. Say they had like $1 billion, they could go, you know what, we're gonna come up. Let's go on ahead and pull a plug. Now, granted, of course, people will be trying to sue them in this, that, and the third, but once again, you're not really entitled to getting your money back because this is what you agreed to when you put your money in the offshore account. So when you get to a certain point with trading, it now becomes a conversation of, do you want to use a regulated broker to protect your capital, or do you want to use an unregulated broker? Now, once you know how to trade, you can switch to a regulated broker, because really what we use unregulated brokers for, and I still to this day do it, is you use them to overtrade. You know, and that's kind of a bad thing, actually. When you're trading properly, the two best ways to trade, and I tell people this, and I'll say it here on YouTube, the two best ways to really trade and get your discipline down is to trade with a funded account and to trade with a regulated broker, because a regulated broker has rules about how much money they will let you put out in the market at a time. If you have $1,000 account and you take a one line and you take about 5 positions, your margin level will be high because you're only trading at 50. Now, offshore brokers give you up to 500. Like a lot of my accounts, I'll put it to 500 so I could just keep trading. But if you're losing trades, you'll be able to blow way more money. So there's a protection there. But once you know how to trade, you're not going to worry about it because you're going to trade what you need to trade and keep it moving. And if you have the capital, a 50 leverage is not really that bad, because you have the capital to take as many trades as you need. If you know proper risk management, that will never stop you. That will stop somebody that's over trading and over leveraging their capital. So it really becomes a question at some point in your journey. Do you want to go with regulated brokers, or do you want to go with a prop firm? Because a prop firm is like a regulated broker on steroids. They have more rules, drawdown, and this, that, and the third. Now, that's a whole nother conversation, and I'll talk about prop firms in another video. But for this video, I'm going to stick to the basics about the pros and cons. The pros of a funded account, I said funded account again, pardon me. The pros of a regulated account are that your money is covered up to a certain amount. Not all of it is covered. It depends on the broker. It does. There's always some drama when I'm trying to record a video. So yeah, so part of that, this is what I mean about audio format. If I put this in audio format, that would kind of be messed up. Some crap is going on behind me with these two people trying to work. I pulled over in a nice area because I'm waiting on somebody as usual. And there we go. So pardon me, New York, life happened. Oh, making all that noise. Jesus. So anyway, I'm going to try to continue the video, but I'll probably have to edit this part because this guy, and I don't like editing my videos, but this guy's just going to sit here and make noise right by where I'm at. Okay, finally he moved. So let's continue. So the pros and cons are, regulated brokers do give you more discipline as far as your over trading. They don't want you over trading, so they won't give you but so much leverage. So pretty much, people who don't know what leverage is, it's pretty much when you take a trade, if you have too much capital out in the trade, you'll get what's called a draw call. Well, they'll actually close the trade because you're too much in drawdown. Real trading is like that. A lot of people don't worry about that, but if you're in a funding account, you already know that you can't do drawdown. They don't want people doing drawdown because that teaches you how to hedge trades, and they don't really want people doing that type of stuff. They don't want you learning these type of things, or I'm not gonna say learning, they just don't want you guys doing that, because then you really start to make a lot of money in the market when you learn how to hold trades like that. If something's in drawdown and you have enough capital to actually hold a trade, and you can hold it until you win the trade, they consider that hedging, because hedging is when you take a trade in two different directions and you just hold both directions till one hits. When one hit, if the other one is negative, you wait until that one goes in the right direction too. That's what hedging is, right? And that's called hedging a trade. And a lot of big companies or people with a lot of capital do that, but a lot of these brokers that's regulated, they actually have that low margin so that you can do that. And a lot of the prop firm accounts do the same thing, because that's when you get into the big boys and the big leagues. When you could take like a US 30 trade, let's say it's a 0.01, and you hold that trade from a negative into a positive, that takes a lot of capital. So they don't want people learning that, because then you'll learn to just keep doing that and hedging trades. I do it a lot, and I have a robot, and I just let my robot hedge for me. And that's why I'm always able to come and post so many US 30 and NAS 100 trades, because those trades do go into drawdown. Of course, I don't post a drawdown, and it's not to be dishonest or deceiving. It's because who the hell wants to see a NAS trade $2,000 in drawdown? You guys are gonna think, oh, he don't know what he's doing. Then when I show it 20,000 in profit, y'all gonna be like, oh wow. But I'm explaining how that's possible and the strategy, part of the strategies. Now, can I just go in straight, go in the right direction on my trade? Of course you can, but that's not the nature of the market. The market doesn't just go straight in one direction. So people who trade like that and they make it look like that, they're usually scalping. And I'm not here to knock scalping or nothing. Of course I scalp as well. If that's what I gotta take, that's what I gotta take. I take what the market gives me. But overall, I don't want to babble and get too off track, but that is the reason why you would want to consider a regulated broker versus an offshore broker. Like I said, offshore brokers have the ability to run off with your money and just close down and do what FTX did to the crypto market. And regulated brokers have way more liability if they try to do that. Both of them can do it, of course. Both of them can just tell you go F yourself and take your money. But with a regulated broker, you have more security and you have more discipline, so you can't just overtrade. So if you're somebody that wants to run wild and take a lot of trades, you would want to stick to a offshore broker. If you're somebody that knows what you're doing, you just want to take your trade, your favorite trade of the day or your favorite pair, then a regulated broker is for you, But I know people who trade big six-figure accounts, capital, they trade on regulated brokers. They will not put up but more than a couple thousand in an offshore broker, and they say for that reason. And I mean, I get it, but at the end of the day, when you really break down how money works and what's going on in the world, every broker can run off with your money. So I actually don't use that as a deterrent for me to say, hey, I'm gonna go regulated versus unregulated. I do have a regulated account. I trade on it. My honest opinion here, and don't be like me, just my opinion. Don't kill me, don't curse me, don't say I'm a bad trader, I don't know how to trade. But my opinion is regulated brokers are boring. I like to see a bunch of trades on my chart. I like to take a bunch of trades. Depending on how much money is in the account, is how many trades I'm gonna take. I'll put a 0.01 on a $1,000 account just to take 20 trades when I could just took one for a standard lot. I do that. I don't know why. I just like to see myself. I like to just trade a lot of positions and win at once. It's just kind of how I do it. I don't like to take one or two trades and then just sit there and just be like, all right, I'm done, 20 pips. I like to see like hundreds of pips on my chart. I know I'm crazy, right? But yeah, so that's it. I'm not gonna make this video longer than it already is. It's kind of long now enough that I feel like I should stop the video here. But at the end of the day, I hope you guys understand that is the difference between a regulated and unregulated broker, and that was my opinion and 2 cents on it. And yeah, I think that it really depends on you And there is no real benefit to either or. You know what I mean? The benefit to a offshore is just that you could trade a lot more than an onshore, and a regulated versus an offshore. That's the only real benefit, or should I say pro and con of it to me. As far as them running off with your money, people use that as like the major pro. Any company can run off with your money. I don't care how legit. A bank can run off with your money. Look at China. You know what I'm saying? So there's always ways to run off with people's money. So that's not really a valid excuse for, to me, for saying, hey, I'm going to put $10 million in a regulated broker and I'm only going to put 10,000 in the offshore. You can still use 10 million on a regulated broker. It's just that people are going to be looking for the 10 million because a regulated broker ain't supposed to be doing that. But hey, if you know anything about money and companies and corruption, it still can happen. So it's your boy Jimmy. Let me know what you guys think in the comment section and your experiences about these brokers. What do you prefer, regulated or offshore? A lot of people surprisingly do use regulated brokers, and I'm not mad at that or knocking that at all, because the discipline it teaches you and the proper risk management, you have nothing to worry about when you do that. It doesn't matter where you go once you use proper risk management. It's all about mitigating the risk, okay? So I'm out of here. Do remember, like I said, link in the description for the audio format version of some of these videos. And I'm out of here, man. Hope you guys enjoyed your Black Friday, Cyber Monday, your Thanksgiving and all that, whoever celebrates these holidays. And shout out to everybody that got you some software on sale. I'll see you guys. And if you got any questions, I'm here. Do remember I sent you guys a link who brought the software that explains everything about how to set it up and everything. I'm going to be making more videos like that, and I'm going to be putting more files for the robots together for people that want to trade certain things, okay? So just keep looking out. A lot of y'all probably get an update link if you purchase certain software. And that's it. So today is the last day of the sale, so I'm pretty sure by the time you guys watch this video, the sale will be ending. So it's all good. Whoever didn't get it, you know what I mean? You trade in, trade. As long as you trade in, as long as you winning, I ain't mad at you, all right? I'm out of here. Peace.